You are listening to chartingwealth.com for Friday the 19th of October 2018. Our book is for sale. If you want to support us, please check it out. You can find links in the show notes on how to buy it. Plus, there's a little video at the end along with special trainings for you. Vertical crossovers, we've got a great training on that. A great training on how to use the daily market worksheet. Those are available also in the show notes as PDFs for free. If you want to supercharge your training, filling out those daily market worksheets, extremely helpful. And a video on learning to read the charts and why it is so important. Whether you're a value investor, whatever, nobody wants to buy high and sell low. Okay, so that's the reason that we review these charts every day to become chart masters. And then we can make proper decisions. So let's talk about, speaking of charts, let's talk about what's going on. Big down day in the S&P 500, even bigger down day in the NASDAQ 100 as represented by the Qs. Bonds down a little bit, about flat. Gold up some. So let's jump first into our weekly chart. And we see that we are on the S&P 500. We see we're going into our second big down week. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. That Heiken Ashi candlestick going down quite strongly. Remember, we had a weekly vertical crossover at the end of the prior week, the 12th of October. And of course, that's what we expect the charts to be doing. Now we go from the weekly to the 2-day. What do we see going on there as our chart loads up slowly? The prior 2-day candle ending on the 17th, and again, these are 2-day snapshots, okay, was a green spinning top, meaning indecision tending up. This latest candle, and it's just the first day of the latest 2-day candle, is a red spinning top tending down. And in fact, there's more down movement there on it. The only reason it's a spinning top is there's a little bit of a wick on top on the Heiken Ashi candlestick. We can see also price percent oscillators kicked over a little further down. Derivative oscillator lost a little downward momentum. But we take a look at our 4-hour chart. What are we seeing there? Hasn't crossed over going down yet, waiting for that to occur. When it does, it'll give us an optimum jumping in point for a down move. Now, does that mean that's going to happen tomorrow on Friday? No, it does not. It does not mean it's going to happen. It means it might happen. And if it does, be prepared to jump in. Check the chart out at noon and see just what's going on. If it's crossed over going down in the morning, then of course you've got a potential jumping in point for a practice trade. The thing I have the most concern about is the price percent oscillator appears to be close to the red signal line, but the derivative oscillator still has a lot of upward momentum. It hasn't burned off yet, but that could change. Typically, though, it ticks up and down in the proper directions. And of course, we always love to see the price percent oscillator cross over the red signal line at the same time that the derivative oscillator goes from red to green or green to red, whether it's going up or down. Here, it'd be going from green to red. So keep your eye on things. Maybe it'll give us an opportunity to jump in to this down move in the morning. And again, we want to find the optimum time to jump into these trades. That's what we're trying to do. Want to know more about it? We're going to have some great training at the end of this video, as I said. And also, we've got a book we would love for you to take a look at, Sixth Printing. Now, we are going to Qs. QQQ down 2.32%. This is the NASDAQ 100. Again, another down candle coming in here. And we can see, of course, that the weekly candle is forming up, heading down. Price percent oscillator going down. The derivative oscillator also going down, gaining downward momentum. So again, that is important. We go from the weekly to the 2-day. What do we see going on there? Well, of course, it was the markets were up over the prior 2 days with a green spinning top. And of course, the first day of this latest 2-day candle is down. It had passed through the 2-day trend line, but we see things now moving in the opposite direction, heading down again. Price percent oscillators kicked over. Derivative oscillator losing a little bit of momentum. We go from that 2-day to the 4-hour chart. And again, we had that beautiful down move that we played after we had that crossover back on the 4th. Remember, after we had the weekly vertical crossover on the Qs on that weekly chart, things really dragged sideways for a couple of weeks, and they only really started barreling down in the prior week, and we had some great action there. But as we are looking for jumping in points on the Qs now, we are seeing things slide sideways and down. And of course, on that 4-hour chart, we've got down movement in the morning and the afternoon passing back through the 2-day trend line. And hopefully we'll see a crossover going down, which will give us another potential jumping in point for a down move. Don't forget, we do try to make virtual dollars in down moves. Something like QID is an inverse fund. In other words, it goes in the opposite direction of the Qs. So do take our training, Inverse Funds, How to Make Money When Markets Crash. That'll help you understand a little more how you can make virtual dollars when the market's going up or down. In fact, I find it easier to make more money. Again, more virtual money. We're not a stock calling service. We're an education firm. I want you to practice with us. But I find it easier to do trades when things are going down. It just works that way for me. Maybe it will for you also. So pay close attention. Okay, back to the weekly chart. 2 more charts to review. 20-year bonds. It was down for the day, just barely 0.04%. You don't see it for the week because it's a bit of an up week so far as the Heiken Ashi candlestick goes. Do look, though, price movement well below the weekly trend line, derivative oscillator heading down, price percent oscillator gaining downward momentum. And it's those indicators we pay the most attention to. We can see on the 2-day chart, first day of the latest one, derivative oscillator continuing to lose downward momentum, price percent oscillator heading up. And again, red candle forming, so we'll continue to pay some attention to that. What's going on the 4-hour chart? Well, if it crosses over, and the derivative oscillator already has, keep an eye. Might have a chance to jump into another down move. We had a successful practice trade this last time things crossed over. Remember, things are still primed to make for a down move. The weekly and the 2-day are still in confirmed down move position. So if you do see on Friday morning things cross over going down, you might jump into a down move on TLT in the afternoon. We'll see on another practice trade. Now, we're going to go from TLT to 20-year, to gold, from 20-year bonds to gold. Gold, of course, weekly vertical crossover going up for the week ending the 5th of October. We're going into a second week of up movement in gold. Derivative oscillators gain lots of momentum. Price percent oscillators shooting up. Remember, we had waited for many, many weeks for gold to confirm a bottoming out, which it appears to have done. And of course, we have a red open box candle, derivative oscillator gaining upward momentum on this 2-day chart, price percent oscillator heading up still. So that's good for potential jumping in points for up moves. What do we see going on gold on the 4-hour chart? Been warning about this for a few days now, how gold peaked out and then has been ticking sideways. The scariest thing for us is the fact that the price percent oscillator is now heading down and the derivative oscillator is almost a flip over, it looks like, to negative. Now, it could pop back up again, but again, some concerns there. So if you're still in that, just watch very, very carefully. Don't lose what you gained after your jumping in point after the crossover going up. Back in the morning on Thursday, the 11th, we had a jumping in point. Again, these are Heiken Ashi candlesticks. Not a super accurate way to be able to call that, but somewhere, around 113.72. Things as high as 116.53. So again, don't lose what you've gained by staying in too long. Just be careful. Keep an eye on things as far as that 4-hour chart goes. Folks, that's where we are as we end the day on Thursday. Going to the last day of the week, don't forget, at the end of the market on Friday, we always record for you our comprehensive review and forecast. So again, very important for you to listen to that over the weekend. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.